Good afternoon, everyone, wherever you are around Australia watching this webinar. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome as we present this webinar on crowdsourced funding, presents opportunities to create new income streams. Wanted accounting firms committed to crowdsourced funding. I can see the headlines now, but does your firm see them? Because crowdsourced funding equity raising is brand new in Australia. No accountancy business has an historical advantage on any aspect of crowdsourced funding equity raising. Now is your opportunity to get involved in this new market. And we're going to talk later on about some of the forecasts about how big this market's going to be over the next few years. But now is the time to get involved. So don't miss this great opportunity to diversify your income, to offer to your team new types of work, new challenges, make life very interesting. Now, why do I say this? Why am I getting excited about the opportunities for the accountancy profession, a profession I've been part of for a long time? And it's because the small, medium enterprises and many of the inventors that this product is targeted at are going to be the traditional clients of small to medium-sized accountancy firms all around Australia. These clients are your natural clients. They shouldn't be encouraged to go anywhere else for this service. This is very similar to how financial planning started back in the 80s. Unfortunately, many accountants, probably including me, were not that enthusiastic about the concept of offering financial planning. And I think accountants miss the opportunity to really control a vital market. There is an opportunity for accountants to be the key professional advisor for crowdsourced funding. Please don't let it go anywhere else. But to do this, you're going to have to offer your clients a great service. And in so doing, you will be creating a new income stream and work stream for your accountancy business. So in the first instance, you need to determine whether a client company or even a prospect is a potential crowdsourced funding company. Now, at this stage, the legislation requires a proprietary company to be converted to an unlisted public company. So in the first instance, you have to analyse your clients. There is, in the phase one, certain legal tests to be met. And in stage two, there's some subjective comments and tests to determine the companies that might be interested. So let's just go through those. In the phase one test, the legal tests, the group turnover or sales has to be under $25 million per annum. Pretty easy to determine. Group asset value also has to be under the same figure, $25 million. And the company cannot be listed on a stock exchange anywhere in the world. Now, they're the three legal tests that a company has to comply with. I then listed what I consider are the subjective comments, because if you went through and analysed your client data base, you'd probably find that most of your companies fit into that category. Under $25 million in sale, under $25 million in asset values, and not listed on a stock exchange. So let's go a bit further. In the first instance, these companies can operate in any type of industry, and there's no age specification. So when you look at the stablemate of this legislation, the early stage innovation company, you will know that there's a great emphasis on under 3 years of age, or in some respects, under 6 years of age. And that's basically it. But in crowdsourced funding, there is no age specification. So phase 2 of the subjective tests, I think we could look at it in this way. First of all, the business review. Have you got a client who aspires to grow? They're an early stage, high growth and disruptive company, is what the venture capital industry call them. That's someone who clearly believes he's going to take his company to high places. But have you got a client that's interested in some business expansion or acquisition of other businesses? And very importantly, anyone you talk to will need to have a vision for their business. And does the company require funding to implement these visions? Some companies will have their own internally generated funding, or their shareholders will be prepared to continue to finance the company. But that's probably only a small group. Does the company require funding to implement these visions? Let's look at another group, which we're calling B, succession planning. Is there a need for a capital injection to facilitate the funding of a shareholder succession? The shareholder may desire one of his relatives to be involved in the business, but that relative hasn't got the wherewithal to pay for the retiring shareholder. And the retiring shareholder requires a certain amount of money for their retirement. So it could be an opportune time to look at a very selective capital injection to enable the funding of succession to take place. And the next area that we suggest you look at is the balance sheet review. Does the company have loans other than bank loans on first mortgage on its property or other bank finance company loans? And would the company like to get rid of those loans? I was talking to someone yesterday. It's undertaking a major move in his business, and he's going to be up for a fair amount of financing, probably about $5 or $6 million. And whilst there might be a government grant that he can access to help him in some of that, the shareholders are going to have to contribute a fair amount of money themselves or borrow money. I then talked to him about the potential for raising capital under crowdsourced funding, and he's very interested. And we're going to have some further discussions in the next few days. Not many people know about crowdsourced funding equity raising at this stage. This particular gentleman didn't. But I think it's up to accountants to make sure that you talk the talk. Talk to them about it. What's the other subjective test? Maybe there's loans from family or friends that are a little bit embarrassing. Or they got high credit card debts, paying a lot of interest. So would the directors be interested in raising some capital to pay out these loans, or some of the loans and credit card debts? I believe that you need to ask that question. Now let's look at the capital raising that's available for a private company under this legislation. Now this is a private company that at this stage is going to agree to be converted to an unlisted public company. So they can raise up to $5 million every 12 months if they require. So would any of these companies we've just looked at with a succession need or high debt, high credit card borrowings, or indeed a vision for a significant expansion of the business, would any of them be interested, do you think, in capital raising, whereby 25, 30, 40% of their business even may be owned by external investors? But those investors would be supplying the capital to enable the vision to be met. So why don't you present a seminar to these people that you've identified? And you could utilize one of the articles we've written to put it onto your internet, send it out to your database and to your prospects, and utilise the draft of a news release that we have prepared that you could send to your local news outlets to see if they'd run it for you, and see who turns up, and see who asks you the interesting questions, and who is interested in further exploring the opportunities to raise capital from crowdsourced funding. So a checklist to assist in the identification of these people, we've prepared that, and we do have it attached, and I'm just going to bring that up. Unfortunately, it wouldn't come up, so we'll send you that if you like with the... Okay, so we now have to go into the new income streams. You need to prepare a crowdsourced funding offer document, which is the de facto prospectus. This will probably require some of these documents being produced. And this is where the new income stream comes for accountants. Business plan, budget, company valuation, share price determination, cash flow forecast, information memorandum. Now, I've estimated that these tasks will require professional fees of $20,000 to $40,000 to complete. Incidentally, the Prime Minister, when he first announced the legislation for crowdsourced funding and early stage innovation companies, indicated that the government was anticipating 5,000 companies to take advantage of these opportunities to raise capital. Now, I've had some people contact me about that figure and believe it is a very conservative figure. One accountant told me it could be as high as 25,000. No one really knows, although I'm going to show you a forecast from a major capital organising business shortly. And that might make you very surprised. But if the 5,000 figure was right, that would mean that this is a $100 to $200 million market opportunity for accountants or whoever does this work for these people. And obviously there's a bit more work to be done than what I've put on that screen. There also needs to be marketing research and a marketing plan prepared. And at the end of all this, many of these companies are then going to require the services of a Chief Financial Officer service, because they're going to hopefully have some experienced people appointed to their board of directors. And those people are going to be saying, look, we require regular, prompt, monthly financial accounts. We need to have someone who keeps their finger on the pulse and keeps us informed and management informed. Now, some of the companies are not going to be very keen about funding the appointment of a full-time CFO out of their capital raised, but they could be very interested in entering into an arrangement whereby your firm supplies them a virtual Chief Financial Officer service. So that's another income stream for accountants who are awake to the opportunities. Part of the role, of course, is to advise your client on the crowdsourced funding intermediary role. Now, the intermediary are people who have got Australian financial services licenses that are going to be appointed as crowdsourced funding intermediaries by the Australian Security Investment Commission. Now, ASIC's still undertaking the interviews of the first batch of applicants to be intermediaries, but I'm anticipating that they are going to be finalised shortly. In fact, ASIC said by the end of October, early November, so we're in that time zone now. So hopefully these appointments will be made and we will know who the intermediaries are. The intermediary's role is going to be competitive because the intermediary can negotiate their own fee with the company. So most companies are going to require some assistance, I believe, in the appointment of a CSF intermediary. Let's have a brief overlook at some of the legislation so that when you talk to your clients, you're aware of what's involved. A crowdsourced funding offer must be made by the platform of a CSF intermediary. and that's a fancy word for their website, whereby they will be able to list the details of your client on their website. Please be aware that this is virtually a public exposure of the CSF offer document, which would undoubtedly incorporate the business plan or key data out of the business plan and some of those other documents that I referred to earlier. So when you're having discussions with clients, it will be necessary to make sure they understand this and appreciate this in their deliberations. I should have asked you before, but I got that wound up in all this. I forgot to ask whether if you had any questions, whether you could type them into the system so that we could respond to the questions during the presentation. I can't find any questions there at present, so if you have any, can you please type them in? The intermediary must hold an Australian Financial Services licence, which has been endorsed to offer a crowdsourced funding overview. So the crowdsourced funding offer document is on the intermediary's website. It can be held there for 3 months, and the potential investors are able to go to that website, and if they decide to invest, they complete the share application form and pay their money to the intermediary. The intermediary holds those monies until the share offer is completed. The maximum period is 3 months, but it can be a shorter period if your client so decides. But my recommendation to everyone is let it run for the 3 months. Give yourself the maximum opportunity to raise this capital. So a retail investor can apply for a maximum of $10,000 every 12 months. And they must have an unconditional right to withdraw from their offer within 5 business days of making their offer. So that's for a retail investor. Just bear in mind a sophisticated investor, someone who has an accountant's certificate verifying that that investor has net worth of at least $2.5 million, can invest any sum of money into a crowdsourced funding company. Now, there's a number of corporate governance and reporting concessions that the government has agreed to for these companies which become unlisted public companies. And these concessions will last for a maximum of 5 years. Now, these concessions include there's an exemption from actually holding a physical annual general meeting, and the company need only provide online financial reports to shareholders, not paper reports. Well, in 5 years' time, we probably won't have any sort of paper reports in any case. And the company need not appoint an auditor. It can, but it need not appoint an auditor for a 5-year period, or unless the company has raised an aggregate of $1 million or more from crowdsourced funding or other offers that require disclosure at any time. My recommendation to people considering crowdsourced funding is that they appoint an auditor in any case. My comment is that the local tennis club and junior football clubs and cricket clubs, etc., all have an auditor. So if someone's going to the market and raising, say, $900,000, the legislation says that you don't have to appoint an auditor for 5 years, but I think it would be good corporate governance and accountability for that company's directors to still appoint an auditor. But that's obviously up to each individual company. The CSFE intermediaries must hold a financial services license. We've talked about that. They have other obligations. They're the gatekeeper under this legislation. They're actually performing some of the role that you might have thought would have been ASICs. They have to check the documents and make sure that the crowdsourced funding offer document complies with the legislation requirements. During the offer period, which can be up to 3 months, they have to maintain a communication channel about the offer so that a potential investor is able to ask questions and get a reply, primarily from the directors or officers of the company and perhaps the intermediary. So it's an interesting aspect of this legislation. The government has deliberately provided for this concept of communications being available, because whilst this is a quasi-public offer, it is nowhere near as detailed as a IPO, an initial public offer for a company seeking a listing on the Australian Stock Exchange. And there are some disclosure requirements of the financial interest that the intermediary is charging and how the intermediary is going to be paid. That has to be disclosed in the intermediary's platform for this particular customer. So who are the potential investors? We believe that they probably are divided into four categories. You've got the sophisticated investors that I referred to earlier, and they'll be great to have. But also we've got the investor who's got assets of $1 million or more, 45 to 65 years of age. What the market calls a progressive investor, someone 35 to 55 with assets under $1 million, but looking around, looking for opportunities, looking for growth investments. And we got the budding enabler, someone wanting to get involved in the market. They're 25 to 40, building up their investment portfolio at present and their funding to invest. So they're the specific group of investors. The last three will generally be in the retail investor category. It's only the sophisticated investor that can invest any amount of money. So what opportunities are there for you as accountants or business advisors under this legislation? You can offer a high value service for your clients without telling clients that they need to go to a larger firm. Why miss out on this opportunity? This is a new revenue line that is a high margin work. There's not much chance of any of this being outsourced overseas because the work will be required to be done in Australia. It will provide new work opportunities for your team. It's strategic work. Every client will be different. Sure, there's a basic framework which is supplied by the legislation, but then you'll be left to your own devices. And the value add for work that you're going to do for your clients will increase the loyalty. Your clients haven't had to go somewhere else. Can you imagine what's going to happen if you've got a company client that's been with you for some years that is now looking at crowdsourced funding or finds out about it? And if you're not talking to them about it, who else is? Is it a competitor down the road? Is it a consulting firm? Is it a big four firm? Talking to them because they've been identified as a potential crowdsourced funding company that's got some potential to go somewhere. You're probably going to lose all their work if you're not seen to be proactive and interested in adding a new service to meet their requirements. We are indebted to some information which we've received from Enable Funding. Enable Funding have previously been known as Australian Small Scale Offer Board. I participated in a presentation very similar to the one I'm doing today at the ATSA conference a few weeks ago in Sydney with the Chief Operating Officer of Enable Funding. And this is some of the information that was tabled at that time. Enable Funding incorporates Australia's first crowdfunding platform, which was founded in 2007, and this was operated under special license from ASIC by ASOB. And over that period of time, Enable Funding stroke ASOB has raised $147 million for 176 companies. The company has actually received World Bank recognition for its pioneering effort. Now, I'm now going to give you some of the crowdsourced funding forecasts that are contained on the Enable Funding website. The total capital raised in Australia in 2016 from activities similar to what we are now calling crowdsourced funding, so they would have been the Section 708 capital raisings, was $119 million. Enable Funding's forecast, 2017, they're pretty well assured of that, will be around 210 million. But then they forecast that in 2018 it will be 420 million, 2019 688 million, 2020 $1.02 billion, and 2021 $1.51 billion. That's a lot of money. And there's a lot of work going to have to go into achieving those figures. Is your accountancy firm going to be part of this whole new industry in Australia? So the crowdsourced funding forecast, according to Enable Funding, is a tenfold increase in just 10 years, in 5 years, sorry. Tenfold increase in 5 years. So why wouldn't you be planning to create a new income stream out of this new market that's been presented to accountants and advisors, literally by the Australian government, who are playing a bit of catch up here and saying, we've got to allow Australian businesses to get involved in this market, because New Zealand's had this opportunity for 6 years. We're only playing catch up. So in summary, crowdsourced funding is a great opportunity for some of your clients to go to the next level. Whether they want to do that to expand their business, buy a new business, pay out some debt, get rid of credit card debts, get rid of the mother-in-law's loan, undertake a succession planning operation in their business. You need, I think, to think about this and start analysing your clients and identifying who might be interested. Because there is no doubt in my mind that for proactive accountants, crowdsourced funding is creating a whole new revenue stream that wasn't available to any of us previously, unless you went down the Section 708 path, which was nowhere near attractive as what crowdsourced funding is. Incidentally, Section 708 is still available, and you can do a capital raising, part Section 708 and part crowdsourced funding. But we haven't got time to go into that today. Just remember, Section 708 is a raising of up to $2 million per annum from only 20 investors. So the mathematics are a bit tough in trying to put deals together, but it's still there. So if you want to get more information from us about what can be done, please contact me. There's my telephone numbers. There's my email. And you can have a look at our sites by going on to www.essbiztools.com.au. I'm amiss, I hadn't been checking on questions. I'm just going to go back there and check on any questions. Well, I hope I have answered all the questions. There is no questions listed. If you do think of a question later on, please send me an email and I will get back to you with an answer to your questions. I do urge you to think very seriously about supplying a crowdsourced funding service to your clients. ESS BizTools have a full product package to assist you in advising your clients on crowdsourced funding. To celebrate the launch of crowdsourced funding, we do have a special price at present, $299 including GST, for a 12-month access to the crowdsourced funding product package. Or you could subscribe to the ESS BizTools Gold package, for $2,250, including GST. That's a special discounted price also that's available until Christmas. So if you are interested in joining us to get further information, I look forward to hearing from you. Thank you for participating in this webinar. Have a great day. Goodbye.